It's Cinco de Drinko. It's Taco Tuesday. And we're all locked down because of a virus that sounds like a Mexican beer. So if that's not an excuse to have a shot of tequila every time we say Buffett or Berkshire,
oh God,
just drink yourself into an alcoholic coma. Drink until the market makes sense is what I say.
Or airlines, for that matter.
It's Australian for portfolio management.
I'm Tobias Carlisle. This is, what is it? Value After Hours.
Value After Hours.
Forgot where I was for a moment there. With my amigos Bill Brewster and Jake Taylor. Only one topic today. We're just going to chew over Berkshire's annual meeting. Who's got the hottest take? Bill Brewster. What's your hot take?
That I'm the go-to Buffett analyst, obviously. No, so I think the hot takes are interesting. Here, I'm going to open up some of my notes so that I can rattle through.
Was that the most bearish you've ever seen Buffett?
I don't know if it was bearish per se.
Subdued?
Yeah, I mean, what I thought was super cool about that meeting was you had a real chance to see a guy who is a legitimate genius think through a crisis. And I think that he was as candid as I've seen him. I really like that there were no life questions. I'm glad that there was no random person. I think Becky Quick did an incredible job keeping him going and on point. I really like that Greg was there. I didn't think that I would like not having Charlie there. I thought that would really taint it. For me, it was a great insight and sort of a peek into the guy that's controlling a lot of internal capital allocation.
He did a lot of Charlie-ish kind of stuff too. He did the Charlie stick.
Yeah, he did. Yeah, he definitely.
No way. I'm fading that take hard. That was not Charlie at all.
Yeah, he did a few I have nothing to add.
Okay, like one joke that everyone knew was coming. I mean, that's not Charlie.
I mean, I thought a couple of the things that he said that I would like to go back and look at. I'd like to understand why he said the FDIC could have changed the Great Depression. I don't have enough of a sense of history to understand why he thought that could have made such a difference. And it made me think through sort of how policy can smooth some of the things that we're going through right now.
Can go the other way too.
Yeah, well, and it's not without consequence, right? I mean, he said a number of times, we don't know what the outcome of all of this is. And I guess, for me to just see him up there talking about probabilities and how wide he thinks the distribution of potential outcomes are and how concerned he is about permanent changes of behavior coming out of this, I think is pretty interesting. Travel for me is something that I really don't think is going to change, but he sort of forced me to sit down and think about, like, okay, well, how confident am I in that, and what are other alternatives? So I just thought it was a really cool way to see him think through a crisis. And, obviously he missed the bottom and he's a loser and the world has passed him by. But I
don't think he's missed the bottom.
It was nice to be able to watch it. No. Well, you haven't checked CNBC or Twitter lately, so.
I don't think we've seen the bottom yet, so I don't see how he could have missed it.
Well, that's because you're not on Twitter. Well, you are on Twitter. You're just not listening. But yes.
That's true. I'm not listening.
I mean, look, that's, it's, I don't know what we were talking about before we got on. I don't know how you can square the policy offset to, I think I just saw that the White House is thinking 16% unemployment by the end of April. Starbucks, their stores that are open in China, I'm pretty sure their comps are off 35%, which is an improvement from down 90. So I guess it's going in the right direction.
Good growth.
Yeah, that's right. So, what does the world look like? Does it create permanent inflections in growth rates? How do people adjust behavior? I just think it was an interesting meeting. I don't think the guy's a sage at predicting this stuff, but I thought it was a cool peek to listen to him think through it.
Yeah, I think what it highlights to me is that he's thinking in probabilities like you're supposed to, and we just added a huge left tail, very high consequence probability distribution, both greater magnitude and frequency because of this. So that impairs the entire implied expected return. So he has lowered his expected return, I think, for a lot of things. And I think that is probably shows it most evidently in what he knows the best, which is Berkshire stock itself, and him not doing buybacks much. I think that reflects a lower valuation in his mind of intrinsic value for Berkshire stock. Whereas everyone else is thinking in binaries that this is either like good or bad or solved or broken or bull or bear. I don't think that's how he thinks about it. So I think that's a good lesson, I think, for all of us to take right now.
Were you a little bit, how did you take the news that they hadn't done much in the way of buybacks because they were worried that 137 billion, whatever it is, might not be enough?
It didn't bother me. But the other thing he talked about was the optionality of the cash. And I think that's another huge data point there that that's him kind of telegraphing, I think I'm going to be able to put this cash to work at much more favorable rates than buying back my own stock at, whatever 1.2-ish or price to book at this point. So it doesn't bother me at all. Like who am I to call out Buffett on, buying something that he knows better than anyone?
I don't mean so much criticizing him. I just mean the implications of what he has said there. Like that really was the thing that I took away the most, that they didn't do a great deal as the market fell, didn't buy back a great deal of stock, didn't go and buy a lot of stock, really just sold some stuff. Very, very uncharacteristic for Buffett. Like you look at every other time that the market's gone down, they've been pretty aggressive through those periods. That was the thing that really gave me the fear. Like I tweeted this thing out yesterday, my Sunday scaries, my Monday scaries was that thought that Buffett's running around with $137 billion and worried that might not be enough, given that they got some huge cash flows going into that business too.
Yeah, I think in general they're probably in pretty good shape, internal cash flow wise. I wouldn't expect a ton of money to be consumed inside the business at this point. Like that excess capital absorbed by basically internal losses. I could be wrong, but you never know what's hiding under insurance. That's why it's so important to trust whoever's the underwriter, just like a bank. But they're railroad, and I guess if things get too bad, there's a lot of fixed costs there, but it's not as bad as other businesses. Energy, I think, is probably relatively good shape. I don't know. I'm not oil. It's like solar panels and stuff that have long-term purchase power agreements or power purchase agreements. So anyway,
some pipeline exposure, but yeah.
Yeah, no, and I mean they have retail, they have other things too that are definitely problematic, but it's not this coronavirus I don't think came after them as hard as some other businesses in general.
Well, and also, I mean, I don't think that we have bailed people out. I think that we have gotten through a liquidity crisis, and now on the back end of it, you're going to have balance sheets that are very impaired, and you're going to have some reasonably good businesses that have bad capital structures on the back end of this. And, what does a business owner in January feel like if the current iteration of the world is continuing? Do they still want to have their family's risk on the line, or do they want to de-risk a little bit? Do they want to enter some sort of pilot J-type transaction where they can sell 20 some odd % this year and then run it for 5 years and then sell the rest? I mean, like there could be transactions out there 9 to 12 months down the road just because he didn't bottom tick March. I mean, look, I wanted a bigger buyback. I mean, but after I listened to him talk, I want my wife to do certain things. She wants me to do certain things. We don't do them to keep this can stay above board here. But it's like, investment and partnership, it's like a marriage, right? And there's going to be periods over a long-term holding where you disagree with your manager. I think after he explained how he was thinking about it, it's hard to call it negligent. It may be something that I disagree with. It might not be how I run my portfolio, but I get it. They might be too big. I mean, that's a legit criticism.
Not too big to buy back, though. I think the thing that he said when he was talking about the buybacks was that it was a little bit confusing to me, the exact phrasing of it, but he said down 30%, and then he kind of went on to another thought, and I just wasn't sure if the two were connected together, but he said, I don't see it's any better value now than it was, before all of this went on in kind of late December last year.
Oh, yeah, I think it's connected.
But was he saying down 30%, it wasn't any better value?
Yeah, because I think what his argument would be is that the downside distribution of the probability tree, you have increased your probabilities of the downside occurring, and the downside has gotten wider.
So that lowers your intrinsic value estimation.
That's right.
Because the downside pulls down your midpoint. Yeah, okay.
Yeah, it might not do shit to like some point estimate that somebody DCFs, but like if you really think through what are all the probabilities out here, he's saying like the distribution of outcomes is pretty freaking wide, and the losses could be pretty big. I think that's new information for him.
I thought the whole thing he was quite subdued. It's hard to tell, right? Because there's no crowd there. There's no laugh track, right, to what he's saying. But I thought he was very subdued. And as it kind of went on, I was trying to work out why he was so subdued. And then I thought, well, it's probably appropriate. We are right in the middle of coronavirus is still around. Lots of people don't have jobs. You don't want to come out and be too kind of too quippy. And but you contrast that with 2008 Buy American IM versus this time around. He was sort of like the Buy American IM was a little bit kind of aspirational, inspirational. Everybody, we're actually doing it here. This time around, it sounded like be careful, I am.
Yeah. What I think is kind of interesting too is I think that his actions with his money are some insight into his private conversations with Bill Gates. And one thing that I have wondered about Bill Gates and the virus is his incentive structure is such that he doesn't really benefit that much from saying, hey guys, this isn't as big of a deal as we once thought, right? And I mean, he's not immune to incentives. Bill Gates is working on his legacy for eternity. So I think he has an incentive structure set up where erring on the side of caution about advising about what the virus could be, that's like where Bill's incentives sort of, if I were to analyze it, that's where I think he would be leaning towards the side of caution. It sounds like he's telling Buffett in private, like, no, man, this thing could be a really big deal. Now, is that because Gates is more focused on emerging markets generally, and could it be a bigger issue down there? I don't know. But, I mean, Buffett's got a hell of a network, and his network's telling him, be careful.
He also has a great overview of the economy from all of the, from the railroads to just, he's got a mini S&P 500 that reports to him internally that tells him what's happening. So he knows where the pain points are. So that's another.
Was that you don't need a by minute opinion on your ownership. I thought that was smart. I mean, he said it in different ways before, but I don't think he's used minute by minute before. And I was like, I like that one.
Tick by tick.
We're all living minute by minute right now in the market and scratching our heads, right? So maybe that's tells you a little bit of get back into some fundamentals instead of tracking like why the hell this doesn't make sense right now.
I got to say, it doesn't make sense the way February didn't make sense. Like, we knew that there was all of this bad stuff going on, and it just hadn't been reflected in the market yet. And I kind of feel the same way now. We know all this bad stuff is going on. It's just not reflected in the market. My bias is that I'm probably a little bit more bearish to realistic. So take that for what it's worth.
I mean, the thing that's tough is I don't know how to handicap what all the fiscal stimulus and what the Fed intervention does long term. I do think that the idea that fiscal stimulus is just on the come until we get out of this thing, I think that is pretty improbable, and there's already signaling that the austerity hawks are about to come out, and that could complicate matters quite a bit.
Not yet. It's hard to say.
I think we're getting close.
Really?
Yeah, I think we're getting close.
Let me ask you this, guys. Why did he bring up that in 1929 the market had a 20% rebound, but took 20 years to get back to flat?
And it bottomed in 30 or 32 or whenever it was. It didn't bottom in 29.
Yeah, and he's giving us this long sweep of history, which I completely agree with, by the way. Like, I think it's really smart to provide that kind of long-term perspective and context and the belief that things will get better. But then to add that in as a pretty major caveat, and that like entire generation of people shied away from equities because of this. Even when he talked about buying and holding something like the S&P 500, he was using 20 to 30 years as the sort of like safe holding period. When before, I think that might have been a smaller number when he's referenced it before. Like, he kind of pushed back a little bit, like, it's safe to hold it, but it might take longer than I've said before. I don't know. What do you guys think about that?
Yeah, that was the other thing that gave me the fear. That was nerve-wracking to see. And he referenced the I think he's talked about the Spanish flu as well. Am I imagining that? Did he say
no, he did.
Like, if you look at what happened to the Spanish flu, the market did crash in 1918, but it crashed a lot. Like, the bottom was like 1921. The bottom was 3 years later.
The Forgotten Depression.
Yeah.
Good book by Jim Grant.
I think as far as like why he did that, I do think that when he talks these, like now, he knows that a lot of people are tuning in, and he knows that a lot of them are unsophisticated. So I do think, look, that like there's a chance out there that shit gets really bad. Like, and if people don't think that, then they're blind. Now, there is also a reasonable chance that the market's totally right and things go up, and then we'll all be grateful because life isn't going to suck. But if you're buying equities today and you're not prepared to hold through the consequences and the knock-on effects of 16% unemployment, which could take 5 to 10 years to work off, and equities through a 5 to 10 year period to work off, not working, and the second order effects of debt defaults and all the shit that can happen, and psychologically the washout that can happen, like, then you probably shouldn't buy equities right now. My mom is older and doesn't have that much, saved up. And I told her, I was like, Mom, I don't think that you should really hold much equity right now. Like, you may need this money. You may not. But if you don't, like, she sells real estate. I said, if you don't, like, Scottsdale real estate should be booming. You're probably going to be okay anyway. Your upside downside skew doesn't make sense given where your life's at. I don't think that's bad advice right now, given where the markets are.
How are all these? How's every baby boomer and pension fund and everyone else state that needs 8% returns to match all their cash flows? How's that fit into your hypothesis?
Yeah, I mean, we'll see. Look, we could go a lot higher. Like, that's in the probabilities, but the big downside is there too, and I think it's underappreciated by some.
Let me just do a few quick housekeeping matters. Love seeing where everybody's from, so stick that in the comments. JT is up against a green screen. You can't see because of the way it's cropped, but he's actually sitting between Buffett and, was it Abel or is it Munger? Is it an older one?
Yeah, it's Abel on that.
Buffett
it's
and
from
Abel.
This year, yeah.
Elliot Chenoweth sent us a super chat. He says, "What's my favorite item at Dairy Queen? I've never Temple of Doom."
Yeah,
it's ridiculous. Yeah, you need a chocolate-based Blizzard.
Yeah, thanks. I'll just everybody tell me what kind of Blizzard I should have, and I'll get it next time.
So much. Now I don't even know where we were.
Next time we're in Omaha, we'll do it in Omaha.
I'll buy you one. No.
The segue from JT background. Let's just lighten it up a little bit because we're gonna have to go and shoot ourselves after this.
This pace.
What did you think about two guys in a gigantic auditorium all by themselves? What was that about?
Strong power move. The man doesn't want to waste money. He's already paid the rent. Yeah. He's not going to pay the rent and not use it.
How do you know he paid the rent? You got to pay. You got to pay a year in advance.
Oh, I'm sure he paid.
Probably. I don't know. I mean, I was brutally disappointed that they couldn't at least pipe in Munger on a Zoom call for 10 minutes, 15
come
minutes.
On. Get him to cameo in.
Just a cameo.
I didn't mind it. Go to Daily Journal if you want Munger.
I do.
I'll be there.
But I also want to hear
blowing up my spot
right now. This is like the exact time when you need that sort of sage wisdom.
He did the Wall Street Journal article.
Yeah, but that's like kind of filtered. This would be straight to the vein. 15.
Oh, he doesn't ever go like hardcore Munger at Berkshire. There's too many people watching. I'd love to have Daily Journal all over again right now.
Yeah, Daily Journal was like 2 months too early, huh?
Yeah, because he goes hardcore there.
They got to set him up on a Zoom. I don't want him in a room full of a few hundred sweaty people who've all come off a plane. They need to quarantine him. You can just do it over Zoom. Do it from his house.
So let's jump to the elephant in Bill's room of
the PowerPoint.
No.
Where do we get the PowerPoint template?
Oh, dude, that was so classic. Buffett with the high school PowerPoint. Just saying, like, flip the slide, next shitty slide after the next. Just fantastic.
I wish there'd been a few wipes and fades in there.
Yeah, dissolve.
A few dissolves.
That would have been dope if it like spiraled at you and then just that terrible formatting came up.
The bounce.
Yeah.
Because you know
learning how to do this.
Somebody in the firm somebody at head office must have been like, I can make that look a little bit better for you, and he was like, sure, go ahead. And so that's the improved version.
That's right. Yeah.
We need more corporate overhead here, obviously.
Take one, he had a lot more words on that. It was just like paragraph after paragraph. Unlikely.
So, Bill, how'd you feel him after he exited the airlines completely?
The whole thing felt fucking good, man. I am finally able to say that I have learned enough from the master that I think in the same general ballpark that he does. I would give anything to be able to listen to him think through the probabilities, because I don't think that you can accuse somebody of being right or wrong until you hear how they assign the probabilities and why. But yeah, man, I mean, I like that I am fearful of some of the distribution of outcomes. I like that he is. I like that I saw something similar in the airlines, and so did he. It makes me feel like I'm improving. So I don't really want to make my career on the notion that like I lost a bunch of money in the airlines quicker than Buffett.
Just
did.
Like Buffett.
Yeah, that's not exactly like the thing I'm trying to hold my hat on. But, you know, I think as far as the process goes, he and I saw similar stuff, and that feels good.
Yeah, really good at capturing Buffett downside.
Yeah,
Strong.
yeah. Shit, I hope I can get some of the upside, but
I did find it interesting that he was almost to the point of laughing about how much volume he saw to be able to sell into.
yeah. Yeah, that
like,
was wild.
Like almost I don't want to
Took
think
us
he's rubbing
months to build the position, and I got out in a couple days. How about that?
pretty easy. I wonder how that happened.
Imagine at the worst possible time, all you guys were buying. That's hilarious.
I mean, wasn't that kind of what was between the lines there?
Yeah.
That's exact. I mean, that was explicit. I don't even know if it was between the lines. I also think, you know, he's talking about how many companies issued debt and whatnot. And I mean, you could see it if you were paying attention too. But I just flashed back to when we were talking earlier. I hope it was during a recorded podcast. It might have been after one. But when I said that, like, my guilty pleasure, Jim Cramer, that I wasn't worried about what the Fed was doing until I started to hear him like shooting the machine gun and saying like Carnival issued debt, Royal Caribbean issued debt, like everybody gets debt. And then Buffett was just like, it was pretty amazing how much debt was issued in those 2 months. I could just hear Kramer. Guy's a maniac.
How about his stamina? Just sitting up there for 4.5 hours, delivered the 1.5 hour monologue from memory, had a few slides up there.
Solid.
Had his
Impressive.
glass of Coke that must have been refreshed a few times, but
I thought it was
pay
the
that.
best meeting I've ever seen. I mean, I really think that like even the '08 and '09 meetings, I've listened to them a couple times. They're not that great because I don't know if the timing, like you just didn't catch them in the real middle of the panic. I just thought that the way that Becky Quick, one of the 10, thanks for listening. You did a great job. But like she did fantastic. And I'm glad that she didn't like, I don't want to fucking hear what he thinks of Wells Fargo anymore. Like, I don't care. That thing's a shit show. Everybody knows it. Get on to like new things. And I really felt like she did a good job not getting bogged down in sort of the stuff that, you know, the general public can get distracted on.
I got a good comment on the screen here. Is it funny that Ted and Todd couldn't find anything to buy in March and April?
It's odd.
I wondered the same thing.
It's only Todd and it's not Ted and Todd because Ted's running Geico.
Yeah,
He still has a portfolio, though, I think. I think he's still PM as well. My understanding.
I found that interesting. You would have thought, given like the fact that they nibbled on Amazon earlier, that maybe they would nibble a little bit more. Or like, I mean, Google got pretty cheap by most people's eyes. It's interesting that they didn't see it that way.
Guess I need glasses.
There must have been word from on high that they conserve cash. We're not doing it this time around.
Oh, I don't think he would ever tell them that.
It's just a coincidence that they couldn't find anything to buy.
I mean, if they're talking together, maybe. And Buffett says,
he's not telling them. He's just saying, "This is what I'm doing."
Yeah,
you do you, but this is what I'm doing.
But by the way, Goat, is saying, "I can't find anything. Nothing's coming in the door that seems attractive. We're getting crowded out right now."
So let's talk about that a little bit. Was it? So I see this stuff like all the time. It was too fast. I got to tell you, in the moment, it didn't feel too fast to me. It felt like a really, really long march.
Yeah. I tweeted out the other day. I said, last night, I said that asset allocation is going to protect you going forward a lot more than stock picking. And what I meant is like the range of outcomes I think is still very wide. Like Buffett said, I mean, like the total crash has been taken off. The total short-term implosion of the financial system was taken off the table. Gunlock, in his CNBC interview,
you're putting zero on that now?
I'm saying I think it's pretty off the table for now. I mean, it may still, nothing is zero. I don't think it's certainly not 5. So it's pretty low.
All right.
Gunlock said that the bond market was more locked up in March than it was in 2009. I mean, I was looking at it. TransDigm was trading at north of 11% yield to maturity. Tiva blew out from 6 to 10.5 in like 2 weeks. I mean, there were crazy moves in the bond market. So like, that got stabilized. But my point in what I said yesterday is like, it wasn't a stock picker hedge fund comment. It was to like, anyone that is in like my position, I think people really got to think about how much risk they want to hold right now. And then within equities, you can sort of debate which equities you want to hold. But I mean, I don't know if you want to be all balls out into equities right now. If you're not and the market shoots up, okay, great. You're still going to be fine. So I don't buy that it was too quick. I do buy that the Fed precluded them from getting the dip financing type packages that they maybe would have gotten in the past. But I do not think the deals are off the table. I just don't think the pain started yet.
Yeah.
Tend to agree. We'll see after everyone gets their stimmy, and then things are still rough. I would be especially concerned right now if we start easing the restrictions on shelter in place, and we just see a bunch of flare-ups again. Like, that's going to be really, I think, demoralizing for us. That we're in this for a while here, and we got to this isn't just going to like go away all of a sudden. If that ends up being the case, when that realization happens, I would say that's when we start to get a real grip of like, all right, this is going to suck for quite a while.
Yeah, this is slightly off topic, but just on the market. When I had this risk arb position in Humana with Aetna in the Aetna takeover, and there were 4 insurers that were involved in a merger out of the top 5, but the largest, United, was not. United, and all of those mergers took a really long time to play out because there were various issues. You remember, first it was the inversion for tax purposes that was blocked, and then the DOJ came in after that was taken off and said that they're going to open an investigation, may block the merger. During all of that period, United just kept on going up. So the range of outcomes at one point for Humana was the deal doesn't go through, or it gets blocked by the DOJ, which is the worst possible outcome in this scenario. Best possible outcome is it gets approved and it goes through, right? So you're trying to handicap those 2 outcomes. On the day that the DOJ formally blocked and the worst possible scenario manifests itself, the stock was up like 20%. So that's one of those things.
Uncertainty.
The uncertainty was worse. The possibility of the worst possible outcome was worse than the actual worst possible outcome. So sometimes I think about that a lot. Well, I think about that a lot, and I've said this to you guys before, but I think this market is a little bit like that, where at the moment we've kind of priced in, except it's the reverse, unfortunately. We've priced in like the best possible scenario. And so the moment that we get the economy's opening up again, everybody back to work, that's when I think everybody's like, oh, hang on, this isn't that great. And we go the other direction, for my 2 cents.
So there's only, in your mind, there's 2 outcomes of this, which is, one is that it ends up being the best case, and then it goes down because it's sort of like, oh, all right. Or it's like worse than everyone thought, and then it probably goes down.
I think that the market, it's not even a question about what actually happens underneath. It's a question about the market's reaction to it. Because I think we all know that it's pretty bad, even if it turns out we open up. Like, I just think that it's one of those sell the fact kind of things. Like, I think that when the announcement gets made, everything's back on, then everybody's going to be reminded of, the market was pretty, I think I'm one of the few people who think this, but the yield curve inversion's pretty good. Like, it did go through. The market fell over. It's just convenient that you get to like, what's Tesla going to do? So Tesla's had a blockbuster Q1. They're going to have a disastrous Q2. They're going to blame it on the virus, and it's not going to be their fault. And so that stock's going to be beaten up a little bit too, I think. I have a bias there, obviously, but I just don't see how they skate through this.
I don't know. I don't know that stock trades on quarterly numbers, but
it doesn't trade on anything. Hopium.
It trades on.
He just had
on a
another
rosy,
kid.
optimistic look at the future.
He had a kid. He's going to get a $750 million or something option payday. Like, everything's coming up. Millhouse
Selling
right
all
now
physical assets.
Yeah.
What does that tell you? In this market, you put your $40 million house. He's got 2 multi $10 million houses that are stuck on the market. Like, now's not the time to. I mean, if I guess maybe you don't care about 10 million here.
Maybe
10
now
million
is
there.
the time. Why is now not the time? There's no guarantee that 2 years from now it's going to be easier to sell something like that.
Yeah, well, I think it's getting harder.
I mean, look, I think that I could see the market going up a lot if you just have to believe that rates are going to be low for a long time. The stimmy works. People come out of this, and in 18 months there's a cure, and we get back to the races. I mean,
but what kind of multiple would you expect then? From
I've
where
said
we
for
are
a long
now.
time, I think that you could double. You're talking about zero rates. Like, people have nowhere else to go. Where else are you going to go? You want to hide in cash while the government prints money and incinerates your cash. You want to go to corporate bonds where you know that the Fed is manipulating all the yields. I mean, it's happening. So you're going to underprice the risk. Or do you want to go to equities where you could actually get some growth? And by the way, in those growth names, these states that are getting the shit kicked out of them financially and are going to tax the crap out of you, at least you don't have to pay on some sort of distribution coming on the near term. Like, I could argue for growth. I just think that there's a lot of ways down too.
There's also 20%. Like, this is the best argument I've heard is that.
You know what I'm saying? Like, I mean, but that's, you got to think in probabilities. And that's what I think was so great about the meeting, is that you're watching the guy whose whole fucking life has revolved around probabilities analyze this crisis through a probabilistic lens. I mean, if you can get over whatever fanboy you have, if you're me, or whatever hatred you have, if you're like some other people, and you just watch the mind work, it was a really beautiful display of like how a genius thinks through a problem.
How do they underwrite?
Yeah, and I mean, like, he's also worried what happens if a Cat 5 hurricane hits New York this year, right? That's been one of the insurance outcomes that he's always talking about being like just terrible.
Gee, that'd be
so
bad.
He's not just thinking about like, this is the worst case and therefore this. He's thinking like, well, God, we're going into hurricane season, and what happens if this happens? And so it's interesting to be able to see a mind like that and then read the 10Q and think through like, okay, what are the businesses that he's worried about? I think it was the best birthday present I could have gotten.
I think there's a good comment on the screen, which is the point that I was going to make too. I think the best argument for the strength in the S&P 500 after this is just the fact that 20% of the index is growing at 20% a year. And it's possible that tech just takes over. And tech is basically anti-fragile to this particular type of crisis. If we get an EMP or something like that, it goes in a different direction. But right now, it's just getting stronger through this. Like, there's no question in my mind that more people come out of this and say work from home is totally like, work from home, don't commute, don't get changed, and we don't have to go and rent expensive office space. You're going to be more productive, and you just zoom in every now and again. So a lot of things that feed on that are going to do better. So tech keeps on growing at 20% a year. The rest of the market becomes increasingly irrelevant.
It's very possible. I would wonder how easy it is to continue to swim. I mean, in a real downside scenario, like, I don't know, how quickly can you swim upstream? There's going to be a lot of dollars taken out of the world in like a bad case scenario. You're talking about debt defaults. You're talking about real estate restructuring. I mean, there's pain. So, I don't know, in a world where people haven't, I mean, we're talking about 16% unemployment, but I think a lot of the white collar jobs right now are pretty okay. Do they stay okay? I mean, do businesses stay staffed like this in 9-12 months? I mean, I don't know. I think anyone that thinks that they know is out of their mind. I think you have to embrace the uncertainty right now.
You also got to look at what's priced in, right? So I think that if you're looking at the without knowing which direction the market's going to go, I think Bill's gone into the Jake tricks somehow, but you got to price in. You got to look at what the odds offered are, and I think that the downside is not priced at the moment. Like, the downside is almost free, and the upside is kind of expensive.
Yeah. What do you think about no stimmy at all for any Berkshire companies?
I mean, I kind of admire it. Was he saying that he wouldn't take it, or is he saying that they didn't take it?
I don't remember him saying they wouldn't, but he definitely said they didn't.
Do you think that's being sensitive to the criticism
everyone
of the last 2008, 2009, that the banks were kind of bailed out and they were beneficiaries of that?
Maybe. I think, I mean, the charitable explanation, I think the one that maybe to me makes the most sense is that they've long tried to run their business in a way that they would never depend on the kindness of strangers, right?
Yeah,
like, he
that was
says
a good
that
line.
a lot. And so this is a way of you telling everyone inside of the company, like, don't take that money. Like, this is a principled thing. Like, this is how we operate. And for you to take that now undermines our culture of not wanting to depend on others.
Yeah, I think we've lost Bill very quickly there, so we're just going to have to
Bill got killed.
I tried to add him back in, but at the moment it's just you and I, JT. Yeah,
Sorry, show goes on.
there's a lot of criticism on Twitter because that's the place that I'm spending most of my time looking of all of the bailouts that they took.
Criticism.
Maybe all of the I follow a lot of guys who are Austrian-ish, critical of the bailouts and that kind of thing, but critical of the 2008, 2009 bailouts. And Buffett comes in for, deservedly some criticism for taking bailouts for a lot of those organizations. I don't know if it's deserved, sorry, I shouldn't say that. He comes in for a lot of criticism for the things that he held taking those bailouts. I think probably he feels similarly to this time around, maybe, that the Fed did front run him a little bit in some of those things because they clearly had enough money to give very, very substantial bailouts to, Goldman Sachs and get the gigantic preference, get the convert, get all of that sort of stuff. So I don't know, but clearly some of that has got through it, right? So they're very clear that they didn't take any of the stimmy.
Yeah, and it makes it easier to give money to Goldman Sachs if you know that their counterparty AIG is getting money shoveled into them, which then goes to Goldman Sachs, right? Like all that counterparty risk that you should have been bearing got shored up by government intervention. Like that is a backdoor bailout of companies that he was invested in.
Yeah, I guess he's well connected and smart enough to sort of have known that was going to happen. I guess that's the criticism, right?
Yeah, I know that's fair. I mean, but I guess that's sort of like the game you're playing too. Like that's one of the variables in when you're playing this game.
Do you have any airlines? You hold any airlines?
I personally own any? Yeah, a little bit.
What do you hold?
A little Southwest, just because I bought it well, I'm a little bit under it now, but not much. But
when did you buy it roughly?
Like late March.
Just the most recent. Yeah. So I own it as well. I've held it. I forget exactly, but I think probably 6 months or something like that. Maybe a little bit more than 6 months. I didn't buy it because I thought Buffett was in it. I'm not going to sell it because Buffett's out of it either.
Yeah.
I'm going to sell it, at some rebalance state. I'll look at how it looks. If it still meets the criteria, I'm going to hold it for 5 years if it keeps on meeting the criteria. But it's going to be a little bit difficult through this period because it is going to get beaten up. It's going to look, when those fundamentals come through, they are ugly. It's lost $900 million for the quarter. Man, that's.
Mm-hmm. Yeah, but I mean, to me, it's like one of the most well-run companies probably in the U.S. It's a difficult business, and certainly this is a really tough period for them. And you may not survive as in equity necessarily. Like dilution is very much in the cards.
Yeah.
And you don't know how hard you're going to get diluted, and it makes it really tough to handicap like what your ownership is going to look like in the future. But boy, like it's a good, well-run company. They weren't levered up. They were pretty reasonable, and it got down to a price where I think when I was buying, it was around 8 times, call it, some kind of earnings or cash flow number. That's pretty cheap for a sort of best-in-class business that has a great culture. In my mind, checks a lot of boxes. It's just a very unfortunate situation for them that they may not survive as the current equity holder. Like you may not survive, but I think the business survives, and maybe even comes out stronger on the other end because other ones will not pass through the keyhole. But we'll see. I don't know. The question is if it's down another 50% from here, am I doubling up? And that's something I'm still been kind of working through.
Yeah, I think the challenge that I have with airlines is that, pre-Buffett's
Not
intervention.
investment advice, by the way.
Yeah, not investment advice. The problem has always been that when one of them goes bankrupt, then they come back in as the low-cost operator with a much better balance sheet than everybody else, and then they compete really aggressively. And so then the one who has the ugliest balance sheet and the highest cost structure is put under the most pressure, and eventually that one goes under, and then they come back out with a brand new cost structure and lower costs.
Equity is just getting boned on every round.
Every single time. So the airlines don't go away, but the equity holders kind of make a big donation in each one every now and again. That happened for decades in that industry. And so the risk is now, I guess, that all of the dirtiest shirts are going to go through that process, and that's going to make it more difficult for Southwest and Delta, which have been well managed and have had the best balance sheets. Going to make it tough for them to compete. Possibly that's what their thought process is. You just don't want to be in this industry at all. It's time to look somewhere else.
Yeah, when I think about designing my portfolio as sort of like owning an empire of businesses that I'm constructing, there's a little place in there for something like Southwest.
Yeah, I think so too.
I could be completely wrong, but it's a very, very small position. It was a toehold sort of starter, and then it hasn't really done anything enough. It hasn't moved down enough to make me want to add more yet. But there's a price somewhere where I'm getting compensated enough to put more in. I don't know. We'll see.
What other takeaways do you have from the meeting? Here's one that I had. Because I'm deep value, I'm more of a Graham guy probably than a Buffett guy, but I'm like 85% Graham, 15% Buffett. But as I was watching, I'm saying I'm 85% Graham, 15% Buffett.
So that waters down 85-15 inside of Buffett. So
yeah, you got me.
95%.
That's what I was saying. But I think Buffett is still 85% Graham too. Like that was I was kind of watching it. I was like, he's probably a lot more careful than I've seen him in the past.
Yeah. Do you want to try to invite Bill back in? I don't know if that's a thing.
I've been trying to call him, but he's not picking up. Oh, he can do it now. I'll see if he's there.
So we had
this is live television.
Yeah, this is great. This should show that like technical difficulty screen where it's like some guy boozing, you know. Another one that I had was that I thought Buffett was talking about how he's been wrong on inflation, but he said that, you know, if the ability to just borrow money and print ad infinitum was like so great, then
here we go.
You would think that we would have discovered it thousands of years ago.
Yeah, that was a great line.
That was a really great line. Like if MMT was so great, we would have already discovered it 1,000 years ago and been doing it.
So sorry, folks, technical difficulties. I think that we've kind of halfway got him back in, but
just the tip.
Somehow you're on both sides of the screen, and I've got no.
Even better.
There we go. He's back out of the Bill Matrix.
Hello. Jeez.
So what happened, mate? Where were you? You went into a wormhole.
I don't know. Now I come back. My background's blurred. Power went out. I mean, just a brutal series of events. Really felt like we had it rolling, and I just ruined everyone with my work from home nonsense.
I thought like zombies had come in and kicked the door down and.
I tell you, this work from home stuff is nonsense. I'm blurring my background. I really thought we had it going, and then it's like the power cuts out, and I was just like,
you lost power?
Yeah. Brutal. Yeah, I apologize.
It's the EMP.
Yeah, I know. I don't know. I mean, it like super matrixed me. Whatever they try to do to you, they took me right out.
So let's do some questions because we've got 10 minutes left. Throw them in there, guys. I'll throw them up to the boys.
I did have another one.
Oh yeah, sorry. Go.
Was, talking about buybacks, which I thought was great. Like finally, hopefully that zombie dies because it just won't go away. But he said that just because someone does them stupidly doesn't make them immoral, and I thought that was a pretty good line.
Just because buybacks are done stupidly doesn't make them immoral.
Yeah. How great was it that we had a Bill Murray question make it in?
Bill Murray asked a question?
Yeah, at the end.
Oh, I did not know that.
Yeah, I wasn't fully paying attention by that stage either. What did he
damn,
say?
Guys, come on. What's that? He asked like what we could do to honor all the like frontline people basically who are, working in the trenches, and I thought it was pretty cool.
And what was the answer?
Buy
Tesla.
Yeah, exactly. Sell everything. No, I don't know. It wasn't. I didn't find there to be like a very definitive answer. There was more like kind of platitudes, but.
So I got a good question here. Would Buffett rather pay a premium valuation once the left tail is chopped off versus running into the fire with a lot of uncertainty?
Yeah, what, for his stock, or like to? I mean, he's got to return capital to shareholders eventually. He doesn't. This is getting insane. But I understand not wanting to sacrifice. What you have a need for what you think.
Do you really think it's that bad? I mean, on a, let's say.
Yeah, dude, it's
200. Well, let's run the numbers. 200 billion-ish in, let's say, private equity inside the company, basically. Another 130 or whatever for cash, and then another whatever it is, 150-ish or something, and well, it's probably lower now, but call it like, well, maybe it's like 180-ish of equities portfolio. That puts you at a roughly 25% cash balance inside the entire thing. Like, that's not to be like conservatively run. You have insurance operations that could pop up with big asks. 25% cash is not like, it's not that material as much as people are acting like it is. Like, he needs to send you a check now because he's got 25% cash. Really, Bill?
It was 17% of my portfolio. Now it's 7%. On March 19th, I sent a friend a picture of my portfolio. I said, buy anything on this list except for Berkshire. So yes, I think he needs to do something with his cash.
I was literally buying it the next day.
From you.
No, he's too big. He's structurally precluded from taking advantage of some things because of his size. And if he's not going to return capital to shareholders, I mean, at some point, you've just, like, the elephant, your cash pile is too large for the elephant. There aren't that many targets out there if you're waiting with all that cash. And he's got one right in front of him that appears to be reasonably priced.
What's that, Berkshire?
Yeah.
I don't know. Tell that to Conrad Hilton in the Great Depression buying hotels for way under replacement value.
JT just hit you with some knowledge.
I'm not saying that it's not going to work out. I'm just saying eventually he's going to have to return money to shareholders. If we're 3 years down the road and the world's okay and he still hasn't returned any money to shareholders, I mean, Chris Bloomstram, that guy is really...
Oh, he's back into the Bill tricks. We've killed Bill.
Bitch.
Really...
Kill Bill.
I'm going to have to cut him off. I got a good question here from Corey Hofstein. Might COVID lead to creative destruction in the economy, increasing technological adoption and efficiency? I think so. I think we're kind of seeing it.
Yeah, I think that's a interesting way to look at it, and that those might be more profitable because of a lower cost. However, I would say that historically, most of that sort of pie goes to the consumer. And so the profitability that you would imagine ends up becoming consumer surplus instead, and
that's
prices
a good point.
Come down. And it's not like all these guys just make all the money. It's more like we all win as a society.
Yeah, we've been doing a lot of that, I think. It's also been working in the stock market too, so who knows. So this is another good question. I don't actually know the answer to this, but I saw a report from AIG today, so it's possible that this is the answer. But Buffett called out another insurer for underwriting business interruption insurance. Do you know who that is?
I don't. within a few, well, as soon as we started to think that things were getting real on this, I started digging in to see if I could find who had like business interruption insurance, business continuity insurance exposure. And so far, what I've found is that most of them have, it's pretty tightly worded so that it's more like if there was something wrong with the structure of where people were showing up to work, and it's not so much that if there's like pandemics. I think there are a couple I found that had some problems that might have been exposed, but probably could have gotten out legally, but we'll see. Like that's going to be lawyers deciding a lot of that stuff.
And Bill's back. Do you know who the insurer was who was who Buffett sort of called out for underwriting business interruption insurance? Oh, he's just here. There's just a photo of him.
I don't. You can't hear me? Yeah, this
there
is
you go.
garbage.
No, you're good. You're good. You're on. You're on.
Timeout.
Yeah.
I don't know who it is. Guy, it looks like Fairfax based on the stock price.
Oh, really?
Well, you're down like below half price to book right now for Fairfax, which is pretty cheap, if assuming the book value is good.
Oh man, sorry, I'm scrolling. This computer's just not up to it. But let me see if I can find some good questions.
You're clearly the technical problem with this podcast today.
Hey.
I'm in a remote location. It's got its benefits.
You're in a bunker. You saw the Berkshire meeting and immediately went to your bunker.
Went underground right away.
Yes. But this bunker has bad power and bad internet.
That's all that the bunker needs is power and internet, and maybe running water. Third,
it's pretty much the worst bunker you could ever imagine.
So Fairfax is kind of interesting. What has happened to Fairfax? Are you guys following that closely?
No, I don't follow them that closely.
I do. So my take is that the insurance operations have been pretty good lately, last, call it 5 years. The portfolio has not been doing much.
Yeah,
and
they're
it's
a little bit deep value, I think, aren't they?
Yeah, a little too much. And they can never get both things firing at the same time. Like when their portfolio was doing well, the insurance was sucking wind. And now the insurance has been doing much better, but the portfolio has been lagging. So you can never quite get on like both feet running under you. However, like I do think it's interesting. They have these deflationary hedges that they purchased at pretty reasonable prices, I thought, when they did it, because no one was really talking about it at that point. There is some like scenario where things get really bad and those things pay off in a big way, kind of like the CDSs that they had during 2008. I don't think it's quite the same probability that they had of winning in 2008, but that could be kind of resulting by Monday morning quarterbacking, looking backwards. But there is some universe where you win pretty big there, maybe. In the meantime, you have a decent insurance operation that's globally focused, not so much U.S., and theoretically some kind of mean reversion in a portfolio that's kind of sucked ass for the last, call it 10 years. So it's not the worst bet in the world I've ever seen, but it may take a while.
It would be a funny world where the hedges he put on for macro reasons, he then
hurt him.
Didn't want them because he started to believe in the macro stuff that was going on, but it would be funny if it actually paid off while he believed in the macro stuff that was going on. It would just be a very funny series of events if he got paid now.
Yeah.
Because the last AGM, he was or the one that we went to together, he was like, I'm not making macro bets anymore. By the way, here's all the macro stuff I like going on. It would be funny if he got paid now. That would be like some sweet justice that the world would be sending somehow. A beautiful irony.
So I got a question here. This might be more of a Bill question, but any thoughts on travel and leisure? Perhaps go with the online booking providers instead of those with hard assets.
I've always liked the leisure market. I think people want to get back to leisure.
I'd take pleasure in other people's leisure.
That's right. That's the one thing that's the one comment that Buffett made that I sort of would like really like to debate him on is I don't know that I actually believe that this permanently changes people's desire to travel and, move around and
I
whatnot.
think 9/11 was more frightening than this was, right?
Yeah, I think so too. So I don't know why he's so freaked out. As it pertains to airlines, I get it because your balance sheets are impaired and you might have too much capacity for a while, and that is a terrible, terrible combo. But as far as like actual changing of human behavior, I don't fully understand why he seemed very concerned about that.
I'll take the other side of that and say that a lot of the leisure and travel industry has a lot of operational leverage built into it. You have a lot of assets to build a hotel. It takes a lot of money. And that marginal customer, when they fall off, if you're at 20% off of capacity, the economics completely change. If you add that 20% capacity back, like you start printing money, right? Like, so I think Buffett's worried about that marginal
It's the
customer.
marginal 20%. Yeah. Okay, that
and
makes sense.
And now all of a sudden, like all these things are structurally unprofitable for a long period of time. And if they're levered up at all, which they kind of tend to be with asset heavy like that, and what seemed like relatively dependable cash flow streams, your goose is kind of cooked. So I don't know. I'm not as sanguine that things come back to. Maybe 8 out of 10 of us do, but those other 2 were the ones that were all the profit for all these.
That's fair.
Well, yeah, and I think I've gone back and forth on Vail Resorts since this whole thing started, and that's a good example. A lot of their money comes from people that are flying and spending money at the ski school and spending money on fancy wine at dinner and stuff like that. I mean, they do have local traffic, but that's like
they
my
probably
buddy
break even on those season passes, right? It's all the tourists whom the real money is.
Yeah, I think that's where that's where the money really flows from.
This might be the last question that we have, but kind of the other side of that question, e-gaming via online work companies. Any thoughts?
I don't know.
None worth sharing.
I've got
everyone else doesn't already know.
I've recorded an interview with Will Hershey. He runs the NERD Nerd ETF, which is esports and digital entertainment. Kind of interesting. That one comes out on Monday. I think that world is so big and so like just not nearly as well understood as it is big. It's so much bigger than film. So much bigger, like just the esports and entertainment part of it, so much bigger than like the amount of money that just gets tipped into it's kind of staggering compared to the mind share that it has. It's one of those things that there must be like right on the tipping point of just becoming completely mainstream that you go and watch other people compete in various of those games versus watching, I wouldn't want to be the marginal professional sporting franchise in the States. So he said
the XFL of esports.
I mean, not even the XFL. I hesitate to say this, but he said the average age of someone who watches baseball is 60 years old.
Yeah.
Believe that. What speaking of regular sports though, how great is The Last Dance? Have you guys been enjoying that one?
Oh, it's fantastic.
So good.
Dude, Jordan's a monster. I'm like
amazing. I always loved him and had respect for him, but like his drive is just it boggles the mind.
Yeah, my dad was never big into sports, so I only watch the NFL, and watching that I'm like so disappointed because I really enjoyed watching LeBron, and I wish that I'm the guy that likes to stir the pot and be like, oh, LeBron's the GOAT, even though I know he's not. And then like I watch that and I'm like, oh man, how can I even make that joke ever again? It's impossible
funny anymore, right? Like,
yeah,
there's no one. Like he is such an alpha. Oh my God.
Yeah.
I haven't watched it. I've got to go and get into it.
God damn it, Toby.
I do want to watch it. Like I grew up. You got to understand that the cultural significance of MJ, like globally, he reached outside of basketball, reached outside of the States. So there are professional athletes all around the world who wanted 23 as their number. So Shane Warne in Australia, who's a leg spin bowler, that means nothing to any of you guys, but he's like a generational bowler. And he had 23 on his back because he was just after MJ, just because he wanted to have MJ's number on his back.
When you say bowler, why don't you explain what you mean by a bowler?
It's a pitcher.
Yeah. In what
I don't know
sport?
why it's called bowling, dude. I didn't name it.
In what sport?
Cricket. Sorry,
Correct.
cricket.
There you go. Now
Apologies.
the Americans understand what you're talking about.
No, they don't.
So he's like, leg spin is like
abroad, they do.
leg spin's like knuckleball. Like it's really hard to control, but when they get it dialed in, they're just unstoppable. They just tear your batsmen apart.
Huh.
Tear your hitters apart. Dudes, that's time. We've gone a little bit over.
Sorry about my technical difficulties. Brutal.
Take your technician out back and shoot him or her.
It's my grandma, bro.
Thanks very much, guys. We'll see you next week.